If I plan on retiring from before my target date retirement fund year, should I change the fund, or is it okay to keep it more aggressive if I plan on having 3 years of cash saved up when I get close to retiring? Well, Teresa, let's start with defining what a target date fund is.
The way I like to describe it to people is think of your investment strategy as having a flight path. So as you start out, it's got a very low bond exposure, very high equity exposure, and then that shifts as it gets closer to the date on that. So if you have a target date fund that is less than 15 years out from today, then it's likely already started that shift, and it might be where you've got a lot more bond exposure than you expected or even need. Because even in retirement, we don't have typically a 60-40 blend necessarily.
Right. Yeah, and important to point out, these are mostly in 401, well, always in 401ks,
Almost always.
right?
Mm-hmm.
You're not going to see that's with use of what a financial advisor is going to develop for you. But it has made investing easy in the 401k. It's an easy lever to pull, and there's nothing inherently wrong with it. But the problem, I think, for us is it may cause you to get too conservative too quickly.
Yes.
And so if you're retiring, I would even say an example might be if we have a client who's retiring in 2025, which is just less than 2 years away, right? We don't want all of their money that they've saved for retirement in a 2025 fund because it's going to be too conservative. You still have to have some growth aspect to it. And we would even say in that case, many times we'll consider the pot of money, the old money, what you've saved and accumulated over time, that may need to be positioned one way, but your new money, we would always kind of want to be a little more aggressive with that. So maybe in a 2065 fund, even if you're retiring in a short time frame because of the dollar cost averaging opportunity there, which basically means as the volatility of the market drives stock prices down, you have an opportunity to buy at a lower per share price, which when the market goes back up, if and when it does, would enable you to own more shares and potentially have a better return. It's not a guaranteed to success, but it is a great opportunity when you're putting money in on a consistent basis. So we'd say that. But the other part of that too is I would say that you don't have to leave that money there. It is not your only option to put it into a click it and forget it retirement date. There is, in many cases in employer plans, an opportunity when you reach the age of 59 and a half to do what's called an in-service distribution. It is not going to be a taxable event. It could be a rollover to a traditional IRA. Now, it would be if you cashed it out, which you have access to as well without penalty, but you'd still owe the taxes on it after 59 and a half. But if you roll it over to an IRA and don't withdraw it, you could open the investment universe is what I like to say. Way more options.
When we talked earlier about that retirement red zone, and when you hit 59 and a half, you're most likely in it. So being able to utilize that in-service distribution option means your investments or your employer plan is still active. You can add to it. You're still getting your match building up to retirement, but you can access the funds that are in there, move them over to traditional or Roth IRAs, and then basically get started funding your plan so it's ready and teed up when you go into retirement.
Yeah. So the point there is it doesn't all have to rest on the options inside of your employer plan. But to answer your question specifically, it could be that you might want some in the target date fund for the retirement year you've chosen, but certainly not all. I wouldn't think I can't think of a scenario where that would need to be the case. But the investment strategy should be more dynamic than just the retirement date fund.
Yes, I would just say look at what's in the fund because usually it'll show you what's in there. Pay attention to that and be cautious of getting too conservative.
Marty, thanks very much for your question. Thanks to John, thanks to Darlene, and thanks to Taylor. You hear the final bell. That means it's time for our closing thoughts. Teresa, we'll start with you.
I would say everything is unique to you. So make sure that whatever questions you have, if you're not getting good enough answers and if you're finding a lot of info but not a lot of wisdom, reach out to a financial advisor that can educate you and help you on your way. I'm going to bring you back in for my final thought because it involves the Conway office. So we do have an opportunity to learn more about estate planning coming up on November 7th. I'll let you tell them about it. Yes, so we are going to be meeting November 7th at 6:30 at the Max event venue in Conway. You can go to getreadyforthefuture.com/estate planning. We have estate planning attorney Chris Rippey out of Conway coming in to answer all of your questions. I mean, if you think about how expensive it is to go to a lawyer, what we're doing is offering you an opportunity to get your answers for free and have an opportunity to really dig into what estate planning is and whether it is something you should consider for your family. family.
Yeah, we had a question earlier from John kind of talking about taxation. That's another build into that, right? I mean,
Yes.
I would encourage John and everybody else to work with not only a financial advisor and a CPA, but even an estate planning attorney when you talk about transferring those assets and your legacy. So again, that is coming up on November 7th at 6:30, the Max Event venue in Conway. Go to getreadyforthefuture.com/estate planning to sign up. Again, it's a free event. We just ask you to let us know you're coming so we know how to plan ahead of time. And, of course, space is limited as well. You can also text the word estate to 501-381-5228. That's 501-381-5228. So we hope that you'll make plans to join us if you're in or near the Conway area for our estate planning workshop. Chris Rippey does a great job. He works with a lot of our clients, and we look forward to seeing you there.